Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing, a channel that's dedicated in investing and personal finance. If you're interested in more investing content, then definitely consider hitting that subscribe button and ringing that notification bell so that YouTube notifies you when I upload more videos. On today's video, we're going to be talking about Credit Suisse because it's having a major impact on the overall market. Even though it's just one bank, it is a huge bank. It is one of the largest private banks out there. It is top 5 in assets under management. It has heavy investors. Really rich people park their money in this bank. It specializes in wealth management and investing, mergers, and investment bank. That is why it has one of the highest assets under management. And that is why it has some of the wealthiest people parking their money at this bank. This bank, if you take a look at the chart over the last 2 years, has had a lot of trouble when it comes to the stock price. They have been hit by scandals. They have lost $5.5 billion just from the Archegos situation. The news does not get good for Credit Suisse. They had to change up their management, and they are in a process of trying to regain the trust of its investors while also not performing well. So, needless to say, even before we get into what we're going to be talking about in this video, the stock, the bank, the company has had a lot of issues and was in trouble regardless. Now, let's get into what happened today and what was just reported regarding this bank. And yes, they are basically getting a bailout. This bank, because of how much assets they have, is considered a bank that is too big to fail, in my personal opinion. And I think that can be shown in the actions that have happened over the last day. So let's get into the story. So on Tuesday, Credit Suisse released its annual report for 2022, and it stated that it had identified material weakness in its reporting procedures and was developing a remediation plan to address the same. The material weakness referred to the bank's failure to maintain an effective assessment process to identify material misstatement risk in its financial statements. So, in layman's terms, what does that mean? What means that its annual filings, they're not correct. They're filings that investors have been using to determine whether or not to invest in this stock, in this company, is not good, have not been correct. That is huge in itself in a company that is trying to rebuild trust with its investors. This is not good news. On top of that, one of its biggest investors, the Saudi National Bank chairman, when asked the question if he would invest more in Credit Suisse, his response was the answer is absolutely not, for many regulatory and statutory reasons. And all of this combined have sent the stock crashing. So much so that default credit swaps on this stock have skyrocketed. What is a credit swap, you might ask? Well, basically, it's insurance against the stock if it was to fail. So it's essentially a hedge. You can think of it as owning stock and then buying a put option to protect yourself. If your stock was to drop, your put option will go up in value. The same thing with credit swaps. If the stock was to drop, if the bank was to fail, the credit swaps would increase. It's basically an insurance. And right now, the price of these credit swaps is outrageous. So basically, let me read you out from a Seeking Alpha report. The bank is amid a series of scandals that has hurt investors and consumer confidence. The cost of insuring the bonds of Credit Suisse against default is approaching a concerning level, with traders reportedly seeing prices of as high as 1,200 basis points on 1-year senior credit default swaps this morning. Seeing spreads of over 1,000 basis points on a big bank like this is unheard of. It's an extremely rare event, and we haven't seen something like this since the great financial crisis. So we have a bank that has not performed well, has lost a ton of money from the Archegos capital, $5.5 billion during that fiasco, has lost trust of investors, is in a rebuilding moment with new management, and has to prove itself in a really, really tough climate where other banks are failing. This is a hard climate for any bank, let alone a bank that has to rebuild trust to try to gain deposits. It's an extremely, extremely difficult situation to be in. And that's why those credit swaps are trading at such high levels. But on top of that, this bank, with being top 5 in private banks with assets under management, it is basically considered too big to fail and is extremely important to Europe, especially. So today it was announced that they're going to get support from the Swiss National Bank Liquidity Facility. They are going to borrow up to $54 billion. But that might not be enough. Consumers may never regain confidence in Credit Suisse. It might take a very long time, and this stock may continue to suffer. Maybe it doesn't fail. Maybe things actually are worse than initially stated. As we know, things can change on a dime and things progress really fast. It was just last week when Silicon Valley Bank was basically looking to raise capital, and then a day later it announced that it failed. Things can happen really quickly. So do you want to put your money into Credit Suisse? Do you want to buy the stock given the risk? I'll let you decide that. I'm not going to give you any financial advice, but I would say buying Credit Suisse at these levels is basically a gamble. Now, this news for the overall market is not good, and that's why we saw the reaction we saw today in the overall market. Now, it regained a little bit. Credit Suisse is up around 6% in after hours trading, given the news that they're basically going to be bailed out by the government, by taxpayers. Taxpayers are going to be paying for the mistakes Credit Suisse has made and for the fact that nobody wants to put their money into this bank anymore. Add this to another long list of potential risks to the market, and this is huge because if this bank ultimately does fail, even with the support from the Swiss National Bank, that is going to be really, really bad news for the markets. Now, I don't know what's going to happen. Nobody knows what's going to happen. All I know is that there's huge risk here, and obviously this is not good for the overall market. It's definitely something to follow, and we'll see what happens over the next couple of days, maybe over the next couple of weeks. Now, I appreciate all of you for clicking on this video and staying to this point. If you want to support the channel and join a community of like-minded individuals, of investors and traders, you can join the Patreon. For only $5 a month, and I price it at that price to keep out scammers, you get access to a private Discord server. It's on there where we talk stocks and investments. I give you all of my trade alerts. It is a community of investors so you can ask questions regarding investing and trading in the stock market. And you also get access to a Google Drive with lots of investing material, books, PDFs, resources to help you grow as an investor and or trader. Outside of that, click that subscribe button, like this video, and I'll catch you on the next one. It's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya.